Welcome to The Bottom Line, where we unpack some of the main business and economic stories of the day. This week, the Polish Monetary Council met for the first time this year. Donald Trump is about to take office in a couple of days, and we slowly get to check the forecasts economists and analysts presented for 2025. Following Adam Glapiński's press conference earlier this afternoon, what we know so far is that interest rates remain at 5.75% for the near future. So what comes next? We are joined now by Witold Orłowski, economist at Vistula University, to tell us more about the significance of today's remarks from the President of the National Bank of Poland. Hello, and thank you very much for joining us on the show.
Hello.
So let's just begin with the IMF's World Economic Outlook that came out today. What are your thoughts in general, and is there anything really that surprises us?
No, it doesn't. There is a kind of a consensus in thinking, because obviously we don't know. But the people who analyze the market, the Polish economy, basically agree that the economy will be growing at some modest rate of growth, let's say 3%. It's on the one hand, it's really modest, because in the past we had growth rates of 4 or 5%, sometimes even more. But given the circumstances, and especially given the situation that Germany is in a big trouble, let's say, you haven't mentioned in your information the forecast for Germany, basically around zero. The next, after the year 2024 with the negative growth, and now everybody's expecting Germany to be around zero, although the Bundesbank. So the point is, obviously, we don't know, but for the time being, the mood is such that nobody expects a growth in Germany. And basically, if Germany is a stagnation or recession, then it's very difficult to grow in Europe, especially in Central and Eastern Europe, that's so deeply linked to the German economy. And looking at that, I must say that this Polish forecast looks reasonably optimistic and reasonably well, although we must understand that this is far away from really kind of a high growth that we would love to see in Poland once again.
Now moving on to Adam Glapiński's press conference just a couple of hours ago. We know that interest rates are at 5.75%. That wasn't surprising. But it doesn't even look like March 2025 heralds the first interest rate cuts, maybe the third quarter. What do you think of his decision?
Well, it seems to be pretty obvious. And, frankly, I must say something like that. Over the last couple of months, if you remember, almost all the Polish market analysts have been claiming that there would be interest rate cuts already the previous year, soon in the next year, if there is nothing happening in the. And frankly speaking, I was talking at any all the time. What are you talking about? What were you talking about? And the inflation is quite high. The interest rates are high as well, but the point that Mr. Glapiński also raised is that the discussion is not about what is the level of the rates, but what is the change of the rates. If the inflation is expected to remain stable, then the rates, there is no reason to cut the rates. And the inflation is expected by the central bank to increase a bit in the first half of the year, then to fall, but to fall basically to the same level that we've got today with the current interest rates. So before I comment on this forecast or projection, as the central bank is calling it, I must say that if you stick to this forecast, and if you remember that the central bank is following the so-called direct inflation targeting. So they look only at the inflation as a target, expected inflation 1 year. There is no reason to change anything with the interest rates. I would even say the bank should rather consider, given that the inflation is likely to stabilize rather than fall with the current level of rates. So there are even reasons to think that maybe the central bank should increase the rates. I do not think that it's going to happen, but basically I agree with this forecast. By the way, once again, the central bank a year ago or something like that was still claiming that the inflation is a falling trend. And frankly speaking, I have been repeating all the time, it's not true. And basically now Mr. Glapiński is repeating the same, that inflation will stay more or less on the same level that we've got it today for the whole year. Uh, the next year we will see, but for the time being, I do not see the reasons why the inflation should be falling in the next year neither. So I rather expect it's exactly what I have been forecasting: the stabilization of the inflation on the level of some, well, I was telling always 5-6%, depending on what's happening with the oil prices. Please remember that the oil prices are still pretty well, we are comfortable with them because they are not growing. They are relatively stable. Hopefully, it may happen that after the agreement has been reached between Israel and Hamas, and if there is some cooling down of the situation in the Middle East, maybe there will be some fall of the oil prices. If so, then the inflation Poland may be lower. But basically, this 5% inflation is something that I would say we deserve from the point of view that this is coherent with the growth, with the inflation expectations, with the growth of wages, and so on and so on. And in such a situation, I do not expect the central bank to cut the interest rate. There's only one element that should be taken into consideration. The fact that somewhere over the year, there will be some maturing of some bonds that have been sold during the pandemics. And if the central bank is just buying them back, and if the government is buying them back, and the central bank does not try to let's say, central bank is not trying to counteract it, then we may have some monetary tightening just because of that. This is the inverse of so-called monetary loosening. It's a monetary tightening.
Well, it'll be interesting to see that. But I just wanted to ask about your opinion, because some ING experts have actually criticized the decision, saying that these interest rate cuts may actually come too late, and that the inflation prospects are more positive than the national bank makes out. What do you think of that?
Well, frankly speaking, I remember the majority of analysts telling that we already should have at this moment a lower inflation. In a sense, they maintain their view that the central bank should cut the rates and so on and so on. But I'm not so much sure about that. By the way, it's although the fault of the central bank, obviously, that the inflation is on this level, and the inflation expectations are on this level in which they are now. So this is not, I'm not praising the central bank, because it's their responsibility to a big degree that we are in a situation like we are. Obviously, the problem with the monetary policy is that the decisions about the interest rates are being made now. And the result is appearing only, let's say, at least 4 to 6 quarters from now. So basically, if it is true that the inflation will be falling in 2026, then basically the central bank could cut the rates now in a foreseeing the fall of the inflation 2 years ago. And this is what the ING experts are telling. We believe that the inflation will be falling strongly in 2026, so there is a moment to cut the rates. I am not so sure about that.
Okay.
But I'm sorry, because I would love to see lower interest rates in Poland because of the needs of the economic development and growth. But for the time being, I'm not surprised the central bank is not doing it.
And just as we wrap up, we're just about to head into Donald Trump taking over the White House. What do you think that is going to do for Polish businesses?
Well, that's a big question mark. Not maybe in a short run, and not something seen on the financial markets immediately, but there is obviously a lot of the question marks about what will be the policy of the new U.S. administration, and there's a lot of people are anxious about that Mr. Trump is making some announcement that sound pretty dangerous, like starting the trade wars with the trade partners. That's something that could definitely lead to the deterioration of the growth in the whole global economy, and including the United States, obviously. And by the end of the day, it may be painful for every economy. Well, and if it starts, then obviously the markets will react somehow to it. That's basically, on the one hand, a lot of the promises of Mr. Trump are pro-inflationary. On the other hand, they are against the growth. So they are, in a sense, so-called stagflationary. Mm-hmm. And that's a very unpleasant situation for the monetary policy, because if there's a stagnation, means a slow growth and a risk of the inflation, then you basically don't know what to do with the interest rates, because of the slow growth, you should cut them. Because of the higher inflation risk, you should increase them. But the point is that now everybody's waiting, really, in my view, and looking at what out of many words that Mr. Trump has been using, which of them will materialize in the coming months, and which are not. I mean, nobody knows. Is it just negotiation tactics of a skillful negotiator, Mr. Trump, to force the partners to change some trading conditions in favor of the United States, or a real plan to start the trading wars? Before we know that, I do not think that anybody is already making the decisions. I mean, everybody is waiting.
So it's still a waiting game then.
And waiting, and then trying to and waiting for the first traces of the answer to the question: is what Mr. Trump has been telling, is it true? Is it going to happen? Or it was just talking?
Okay, well, we wait until next week then. Okay, Witold Orłowski, thank you so much for joining us.
Thank you.
And we were joined by Witold Orłowski, economist at Vistula University. Thanks so much for joining us today. I was your host, Marie Cato. Join us every weekday for Business Arena at 5 p.m. CET on TVP World. For the latest in regional business, follow us on X and on tvpworld.com. And for more news and features, stay with us on TVP World. Goodbye.